Good day and welcome to another episode of your Money Moment, the podcast where we dive into the world of investing and financing, offering you insights and tips to help you navigate the complex landscape of the market. I'm your host, Mauritz Oberholzer, and today we're going to go and talk about a topic that is crucial for every investor to understand, and that is volatility. More specifically, we'll explore why volatility is a normal part of investing and highlight the career of one of the most legendary investors of all time, Peter Lynch, to illustrate this concept. So let's start with the basics. What is volatility? In the simplest terms, volatility refers to the degree of variation in the price of a financial instrument over time. It's a measure of how much the price of an asset, such as a stock, can fluctuate. High volatility means that the price can change dramatically in a short period, while low volatility indicates more stable prices. Volatility is often perceived negatively because it implies risk. When the stock market is volatile, prices can swing wildly, which can be unsettling for investors. However, it's important to understand that volatility is a normal and inherent part of investing. Markets are influenced by countless factors, including economic data, corporate earnings, geopolitical events, and investor sentiment. These factors can cause prices to move up and down, sometimes sharply. Peter Lynch and the Magellan Fund. To put this into perspective, let's take a look at the career of Peter Lynch. Peter Lynch is best known for his time as manager of the Fidelity Magellan Fund, which he led from 1977 to 1990. Under his management, the Magellan Fund became one of the most successful mutual funds of all time. During his tenure, Lynch delivered an average annual return of 29%, far outperforming the S&P 500 index. By the time he retired, the fund had grown from $18 million in assets to over $14 billion. This incredible performance made Peter Lynch a household name in the world of investing. But here's the key point. Even Lynch's extraordinary success didn't come without volatility. The Magellan Fund experienced significant fluctuations during Lynch's management. His fund dropped 10% 15 times, it dropped 15% 6 times, it dropped 20% 4 times, and it dropped 35% 1 time. But even with these drops, the fund usually recovered and also reached new highs. For example, in the early 1980s, the fund faced considerable volatility due to economic uncertainty and market turbulence. Despite these challenges, Lynch's long-term perspective and investment acumen allowed him to steer the fund through these rough patches and continued to deliver impressive returns. Lynch famously advocated for patient and disciplined approach to investing. He believed that investors should focus on the long-term potential of their investments rather than being swayed by short-term market movements. His philosophy can be summed up in his famous quote, "The real key to making money in stocks is not to get scared out of them." So what can we learn from Peter Lynch's experience with the Magellan Fund? First and foremost, volatility is an inevitable part of investing. Even in the most successful investors face periods of uncertainty and market fluctuations. The key is to stay focused on your long-term goals and not to let your short-term volatility derail your investment strategy. Secondly, to navigate volatility, it is essential to diversify your portfolio. Invest in quality assets and maintain a long-term perspective. Remember that the stock market has historically trended upward over the long term, despite the periodic downturns. By staying disciplined and not reacting impulsively to market swings, you can ride out the storm and achieve your financial objectives. It is important to work with someone who can help you with the long-term goals and put you in a position where you are in a fund or in an asset class that suits your risk profile and that also makes sense for your long-term strategy. In conclusion, volatility is a natural and normal aspect of investing. It's something that all investors, from novices to seasoned professionals like Peter Lynch, must contend with. By understanding that volatility is part of the journey and adopting a long-term perspective, you can better navigate the ups and downs of the market and work towards achieving your financial goals. Thank you for tuning in to your Money Moment. Until next time, stay focused, stay disciplined, and invest wisely.
When you're navigating through life's big events, like buying a home, starting a family, or approaching retirement, you need sound and impartial financial advice. Mauritz Oberholzer, a financial advisor at Stonehouse Capital, specializes in personal financial planning. visit mauritzoberholzer.co.za or call 082 774 1996. For practical and easy to understand advice and tips, don't miss your Money Moment with Mauritz Oberholzer, Thursday mornings at 10 on E-Radio.